Thank you.
Shri Suresh Prabhu.
Yes. Thank you. Thank you, sir.
Thank you, sir. Sir, this is the first year of the 9-5-year plan, and the finance bill for the year 1997-98 happens to be the first such finance bill under this new plan. So we have an approach paper for the 9-5-year plan, and it also projects a growth rate of 7%, which also is a growth rate that is contemplated by the same budget. And the whole budget exercise hinges on this 7% growth rate. I genuinely feel that we should be able to attain this 7% growth rate, but considering our past and also the bottlenecks that our Honorable Finance Minister himself is talking about, and also which has been apprehended by the approach paper itself, I'm afraid whether the bottlenecks of infrastructure will really make it possible for us to attain this 7% growth rate. And if we don't do that, the entire collection of excise, collection of income tax, which are based on certain growth parameters, may not really realize. Sir, the savings rate, the current, this 9-5-year plan is estimating savings of 26.2%. The 28.6% investment rate is also contemplated under the same 9-5-year plan. But this finance bill has done very little to promote savings. Maybe the one way of saving is reducing corporate tax, which will also help the corporates to save more. But also there is an incentive to distribute more profits by way of dividends, because now dividends are tax-free. So probably the savings rate, there should have been more meaningful contribution. There should have been some direct incentives for people to save in this budget, in this finance bill, which I am afraid is missing. Sir, I will definitely like to confine myself to finance bill, not like to speak on budget. But sir, again coming back to the same approach paper, so we are contemplating a high export growth of 14.5% in this plan period. And I am sure when we are contemplating 7% growth rate, we are also taking into consideration this growth rate in exports. So the current year, our export growth is only 4%. And I'm sure everybody is worried about it. There should have been some measures, some incentives, they should have been provided in this finance bill for promoting exports. Sir, our inflation now, which is 7%, and I'm sure by the end of this year, it will definitely be a double-digit inflation if our oil pool account deficit is tried to be recouped. Sir, if that inflation, even if you take it at 7%, the inflation of our trading partners in Germany, in USA, in Japan is lower. So certainly to promote export, there should have been some more incentives provided in the finance bill, which unfortunately are missing, sir. So another important sector on which a great reliance has been stressed is the small scale sector, and which is supposed to contribute significantly, as is again, if I refer to the same paper, more than 45% of our GDP from manufacturing is supposed to be coming from this sector. And this year, we are taking a lower ICOR, incremental capital output ratio of 4.08% in this. And I think there again we are relying for taking lower from 4.26 to 4.24 to 4.08. I think again we are relying more on small scale sector. Sir, again here I find that there are very, very little which has been provided in the finance bill to promote the small scale sector. Sir, again, another area which is amiss is some provision for SIG companies. A large amount of capital has been blocked into SIG companies. The money of public sector institutions, financial institutions, the private money, the disguised employment, which we see this on paper, which again is available only on paper because the companies are turned SIG. So the measure that the finance minister has initiated, like the voluntary disclosure scheme for incomes, I think there is need to have a one-time settlement situation for SIG companies like this, so whereby this could be turned around and probably this capital, which is now locked, could come out, and probably this will also help in creating, bringing it to a product to use. Sir, another point which I think should have been given more prominence in this finance bill is pertaining to employment. Sir, there is no incentive for an economy to create more jobs. In fact, there used to be a time when the corporates had to reinvest their money into plant and machinery and to put it into more product to use so that they could qualify for better deduction from payment of tax. But now the investment allowance has been taken away many years ago, of course, and now there is hardly any incentive for creating more jobs. So as the Honorable Finance Minister said yesterday on the floor of this very house, that 42% of the GDP is now coming from services, and the services which contribute significantly to provide more jobs, in fact, was sought to be penalized for creating more jobs by taxing them in the form of service tax. But I am glad that the decision has been deferred. Of course, I am aware that when 42% of the economy cannot pay any tax, the Finance Minister will always find it difficult to match with resources. But at the same time, we must keep in mind this sector, which contributes so significantly toward job creation than any other sector, should not be penalized for doing so. Sir, I think I just make one reference to this voluntary disclosure scheme. I am glad it has been partially amended. But there is always a temptation for any finance minister to go in for a voluntary disclosure scheme after maybe 10 years or 12 years. And this is not the first time that he has done it. Other finance ministers also done it in the past. But there is a time that instead of bringing about voluntary disclosure schemes every 10 or 12 years, let us have preventive measures to make sure that there will not be any incentive for people to evade tax. And for that, I think there is need to have a comprehensive legislation bringing about where most violation takes place is in terms of properties. So this is no point giving amnesty under the Income Tax Act, but there is an incentive for people to evade tax because there is a high incidence of stamp duty also on such transactions. So what is really necessary is that we really have some parameters to determine a transaction cost for such transactions, and the transaction cost must include all types of taxes, be it income tax or a stamp duty or anything. So I am sure they will prevent in evading certain tax in future. Sir, let me briefly come to the provisions of the finance bill. So this clause 3B, which was deleting section 1015A of the Income Tax Act, you have already mentioned that now you are going to make it prospective. But sir, this is very necessary if we really feel that the open skies policy that we talked about, and also to protect our own national flag carrier and also some other airlines. Sir, my state, the Maharashtra state, has started his own airline. Is it possible for new airlines to equip the aircrafts on outright basis? They will have to necessarily resort to leasing. And if they are going to resort to leasing, such type of a benefit which was given for so many years need not be removed. In fact, deferring it by year and making it applicable prospectively may not really be the right thing to do. So clause 25, which is 80IA, the new exemption that you are introducing, we are giving certain benefits to hotels started in hilly areas. Sir, Sindhudurga district is the first district in India to be declared as a tourism district by Union government as well as by the state government of Maharashtra. The Sindhudurga district is the first district in which the country has declared it as a tourism district. So probably all the hotels which will be coming up in this district should qualify for this deduction under section 80IA. I think that is what you really should incorporate, is my humble request. Sir, clause 12 and 13, which deals with section 11AD and 11AE, are also, there is a real mischief which has been played by this amendment. Sir, the civil contractors and transporters who were told by a CBDT circular dated 23/2/1996, number 684, very clearly that salaries paid to partners and interest paid to partners will be deducted for the calculation of presumptive tax. Suddenly, you are making an amendment with retrospective effect, overruling that CBDT circular. So the assessees who relied on a circular specifically issued by CBDT, and if you try to overrule that circular by making an amendment to the Act with retrospective effect, I think you are really defeating the very purpose of the CBDT. You are asking CBDT to deal in many years delegated legislation. If that delegated legislation and there's certain rules, circular issued by it, are going to be changed by the Parliament by making Act retrospectively, I think it will be very unfair. Sir, the clause 40 dealing with section 1150, there is the drafting. I think there is need to have a relook into it. This word addition to and additional income tax gives an impression that a company which is normally not supposed to pay in income tax will not be liable to pay income tax under this section 1150, and I think this needs to be probably, this words are not necessary, could be deleted, and this will really avoid undue litigation in times to come. Sir, the other point which I think is a welcome, I welcome this measure of abolition of tax on dividends, because it was, in our opinion, and a confirmed opinion of ours, was a double tax which was twice on the same income in different hands. Sir, but if you really take this principle forward, then a tax paid by one company to another company, the dividend paid by one company to another company, in the hand of the same company, if the company is going to distribute the same income as dividend to their shareholders, probably the 10% additional tax will again be attracted, and this very principle which you are trying to follow of double taxation will not be, the real purpose will not be served, and I think there also needs to have some amendment to this. Sir, the mutual funds income also needs to be exempted from income tax. I think if you don't do that, again the basic very purpose for which this amendment is brought will not be served. Sir, clause 27, I think it is very unintended. I am sure Finance Minister would definitely like to bring about this amendment. This clause 27 seeks to amend 80L. In fact, clause 4 of 80L is sought to be deleted from 98-99 assessment year. But for first 2 months of April and May, there is only dividend declared after 1st of June are going to be exempted. So for first 2 months, whatever income will be received in the hands of the assessee will not be getting exemption under section 80L unless you keep this section for some more time in the statute books. Otherwise, this will also really not be serving the purpose. And also because you are already taxing, you are going to continue to tax dividend as defined under section 222E. And in the absence of that, if you don't keep this section there, it will also may not be serving the purpose. Sir, the clause 14, also I am happy that there is some amendment brought now, but 44AF, which was brought for the retail traders, there is really need to define the retail traders properly to avoid undue harassment in the hands of tax officers to the retail traders in the district and small towns. Sir, this section 145, I think the Honorable Finance Minister would really like to apply his mind to this. Sir, section 145, which is not amended during this Finance Bill 1997, but was done so earlier, but is going to come into effect from 1/4/1997, makes it obligatory on the part of assessee to declare his method of accounting. Sir, as you know, normally in India, we follow hybrid method of accounting. Any assessee receives income and he pays his outgoing, and depending upon the nature of it, he accounts for it, either on a cash basis or on a mercantile basis, but on many times on hybrid basis. But sir, now it is mandatory for a person to declare it as cash or mercantile, and this very method which is sought to be introduced now is also appreciated by this high-powered committee which was appointed to simplify taxes, and they also appreciated it. So probably from 1/4/98, they may themselves recommend to abolish this, and the CCIT, the Chief Commissioners of Income Tax, also made and thought that probably this is also not in the interest of revenue. So I think this amendment of section 145, which is to come into force from 1/4/97, needs to be looked into. Sir, section 80O introduced by clause 29 of the income tax from the Finance Bill 1997 intends to tax patents and invention designs which are sold outside India. Again, sir, this is something which may not be something which Finance Minister really wanted to do, because in his budget speech he said that he has great belief and great regard for the patriotic spirit of all the technicians. So if this income earned by them is sought to be taxed, may not be serving the intentions that he has had in mind. Sir, I am not referring to an amendment, but something which should be introduced is section 80P. Sir, Mr. Sanat Mehta, my illustrious colleague who is sitting here, would share my views. The cooperatives are exempt from tax under section 80P of Income Tax Act because of concept of mutuality. A member, if he joins hands and carries on an activity, the income in the hands of members together cannot be taxed because members themselves have contributed it together. But sir, in case of certain federal societies, in the hands of primary societies you are not taxing it, but in the hands of federal societies, such income is sought to be taxed, which is really defeating this concept of mutuality. And I am sure the Finance Minister would really have a look into this. And also, the reserves invested by these cooperative institutions, the income earned on the reserves is again taxed, which is again, sir, is not really, which is defeating the purpose. And I think, I am sure, sir, I will try to quickly run through the other things. Sir, about the excise, the amendment to section 4A, I would welcome it actually. for the simple reason is there was really an evasion of tax of a large magnitude on that. But the purpose in which it is made is something which is not right. Sir, on one side we are talking about value-added tax. So we are saying that we assess the value of a product and every tax will be added on that point onwards. So now we are going backwards and saying that the retail price will be the starting point of assessing how much tax should be paid, and we work backwards. Sir, this is something which are on one side we are talking about VAT, on the other side we are talking about taxing an income on the basis of retail price. So this would only mean how to do it is something which, and the finance minister would certainly have a better way of doing it. And the definition which is given in the bill is so terrible that it says that under the provisions of the Standards and Weights and Measures Act 1976 or any other act or under rules made thereunder, other than that, it could have been defined more positively, and I think that would have really helped in reducing probably certain litigation which I am sure is going to come. But however, there is a great potential to tax income there, because I know that so many companies are hiking the price, retail price, and paying excise duty on a much lower point than what it should be. Sir, the small scale sector, which is really suffering in the hands of excise authorities, and the figures that the finance minister had given yesterday, that only 22,000 of the total, 47,000 of the total small scale industries are really subjected to this. But sir, the previous finance minister used to always talk about removing Inspector Raj. Sir, his Raj has gone, but inspectors are still remained, and inspectors are still harassing the small scale industries. So SSIs may not object to payment of tax because that is what they should be doing. But the way in which it is collected, the administration of the tax, the excise collection machinery itself needs a total revamping. I am sure the finance minister would certainly look into this, sir. And sir, I know, sir, I just quickly, I am not even reading all, I am just taking
no,
few
you
points.
have taken more than your time. Kindly conclude now.
Yes, sir. Sorry? Yeah, okay. On customs, sir?
Yeah, that would be better.
Yeah, I will do that,
Yeah.
sir, of course.
But you conclude now.
Okay, and I'm not, now I'm just giving you some suggestions. Yeah.
Prabhu, now.
Yes, okay, so I'll just go to, okay. Sir, I am just doing that in fact. Sir, I only make one suggestion, that there is a provision for advance ruling for non-resident Indians. The same type of, there is a need to have an advance ruling commission which could be started not only for income tax but for excise and customs, and that commission's ruling should be binding probably on all income tax as well as all the other revenue machinery, so that there could be a proper understanding about how it needs to be done. And sir, one suggestion which has been made and which becomes more valid now after the 73rd and the 74th constitutional amendment, the local self-governments have to raise their own resources. For them to raise the resources, there is a need to have tax-free bonds which they will be able to issue, and those bonds probably will help them to raise the resources, and the 73rd and 74th amendment spirit could be really attained if we do that. I think, sir, I am just concluding without completing my speech as per your desire, sir. Thank you.
Thank you. Sri NSV